Hey everyone! In today's video, we're testing a powerful trading strategy that combines the RSI indicator as a momentum tool with another indicator to accurately identify trends. We'll code the entire strategy in Python, fine-tune it using Freqtrade's optimization tools, and run comprehensive backtests to assess its performance. Before we start, make sure to hit the subscribe button and turn on the notification bell so you won't miss any of my latest videos. Let's get started. Let's begin by introducing the first indicator, the Relative Strength Index. The RSI is a momentum indicator that measures the strength of price movements in one direction. It helps us see if the market is trending and how strong that trend is. For our setup, we'll use the 14-period RSI, which is common for short to mid-term strategies. Instead of using the RSI value directly, we'll apply a moving average of the RSI. This will serve as a signal line for our entries and exits, filtering out noise and smoothing the RSI values. The RSI SMA crossover will be key in generating our trade signals. When the RSI SMA value is above 55, it suggests a bullish trend and acts as a potential buy signal. When the RSI SMA falls below 45, it indicates bearish momentum, which could signal a short position. However, we can't rely on the RSI alone. Using it without a broader trend filter could lead to false signals, especially when trading against the long-term trend. That's why we need a second indicator to confirm the overall market direction. Next, we'll add the 200-period simple moving average to our chart. The 200 SMA is a popular indicator for identifying long-term market trends. It helps us decide whether to look for long or short trades based on the price's position relative to the moving average. If the price is above the 200 SMA, we see the market as being in a bullish trend, so we will only look for long positions. If the price is below the 200 SMA, the market is in a bearish trend, and we will only look for short positions. This mix of the RSI SMA for momentum and the 200 SMA for trend direction helps us trade with the long-term trend, lowering the risk of entering trades in bad market conditions. Now that we've added both indicators, let's go over how the trading rules work in this strategy. The first condition is our trend guard. We only consider trades when the closing price is above the 200 SMA, which shows a bullish market. The second condition is our trigger signal. We wait for the RSI SMA line to cross above 55. This indicates strong momentum that aligns with the bullish trend. The third condition is an extra risk filter. We avoid trades when the candle size is too large, as this may mean the price has already moved significantly. This helps us stay clear of trades when the market is overextended. When all three conditions are met, we enter a long position. To manage risk effectively, we'll set a stop loss using the ATR indicator and target a take profit with a 2-to-1 risk-to-reward ratio. This approach helps secure profits when the trade moves in our favor, while minimizing losses if it goes the other way. Here's a perfect example. This trade reached our take profit target just as planned. Now, let's look at a short trade example where the rules are simply the opposite of the long trade setup. The first condition is our trend guard. We only take trades when the closing price is below the 200 SMA, which shows a bearish market. The second condition is our trigger signal. We wait for the RSI SMA line to cross below 45. This indicates strong downward momentum in line with the bearish trend. The third condition is our risk filter. We avoid trades when the candle size is too large, making sure we don't enter after a big move has already happened. When these three conditions are met, we enter a short position. To manage risk in both long and short trades, we'll set a stop loss using the ATR indicator and target a take profit with a 2-to-1 risk-to-reward ratio. As you can see, this is another successful trade. Now that we've covered the strategy, let's dive into optimizing it for better performance using Freqtrade, a free open-source crypto trading bot built with Python. If you're interested in learning more about Freqtrade, be sure to check the link in the description for a complete Freqtrade course. Here's our approach. We'll test our strategy on the 1-hour time frame. We're splitting the data into two parts. In sample data, 8 months. We'll use this data to fine-tune the parameters of our strategy. Out of sample data, 4 months. This data will test our optimized strategy on new, unseen data to see how well it holds up in real market conditions. Here are the parameters we will optimize. RSI upper threshold for long entries. Testing values of 55, 60, and 65. RSI lower threshold for short entries. Testing values of 35, 40, and 45. RSI length. Testing 7 and 14. Maximum candle size. Testing 3% and 4%. Holding period. Ranging from 5 to 7 days to capture gains when the market is no longer trending. ATR multiplier and risk ratio. Used to determine effective stop loss and take profit levels. We will use Freqtrade's HyperOpt feature to identify the optimal combination of these parameters, aiming to maximize profit while minimizing drawdown. All right, let's take a closer look at the backtesting results and analyze the strategy's performance. We ran this on ICP perpetual futures, using a 1-hour time frame over the past 1 year with this OptimZ setting, and here's the result. The strategy achieved an impressive 563% total return over the backtesting period. Long positions. 146% total profit. Short positions. 416% total profit. During the same time frame, the broader market declined by 50%, highlighting the strategy's ability to generate substantial returns, even in unfavorable conditions. The maximum drawdown was 21%, indicating that while some pullbacks occurred, the overall profitability remained strong and well controlled. Next, let's take a look at the visual representation of the results. The equity curve shows a consistent uptrend, demonstrating that the strategy generated steady profits over time without significant setbacks. To fine-tune the strategy, we used 8 months of in-sample data to optimize key parameters, ensuring the best possible settings. Afterward, we conducted out-of-sample testing on the remaining 4 months to validate the strategy's effectiveness on unseen data. This step was crucial in ensuring that the model is not overfitting to historical trends and can perform well in real market conditions. If you'd like to download the Freqtrade strategy file and dive into it yourself, be sure to check out the link in the description below. I've also created a pair-optimized version, allowing you to trade multiple pairs in one setup, each with its own fine-tuned parameters for enhanced performance. If you found this video helpful, don't forget to hit the subscribe button, turn on notifications, and share it with your friends. Thanks for tuning in, and I'll catch you in the next one.